With so many options out there from FHA, conventional to creative financing, it can be overwhelming deciding on which is the best loan program to help you generate 5 figures a month in real estate and to build your portfolio. So in this video, I'm going to cover the top loan programs that you can use as an investor. And honestly, 9 out of 10 investors I talk to don't even know some of these loan programs exist. So make sure you watch to the end, where I'm going to share, in my professional opinion as a licensed loan officer, the best loan programs that are still working today to be able to generate over 5 figures a month in real estate. First off, I'll share the best loan programs that have the lowest down payment that can help you start building that portfolio early on. And this program is the most important yet the most overlooked by investors, because a lot of them miss out on good deals by not leveraging this program. And that is the conventional HomeStyle Renovation loan program. So now you can buy a 2 to 4 unit property, putting 5% down conventional and getting 100% of the construction rehab financed as well. So what this does is it allows you to buy a 4-unit building, and then you can house hack, live in 1 unit, rent out the rest. But not only that, you fix up the property, then take cash out to go buy the next one with the forced depreciation that you just did. So if you already have properties, you're like, Ben, I have like 10 properties already, or 2 or 3. Then what you could do is find someone who's single, find someone who can move, and partner up with them to be able to house hack on their first property. And you make an agreement where you could help manage the building or help with the down payment. Whatever the case may be, this loan program people are sleeping on because they don't know that conventional can not only give you like 5% down, 95% financing, but also they'll give you money to fix up the freaking building. Why this is so good is because you can charge top dollar rents and you can attract high quality tenants because each unit is really stunning and it's in great condition. As a bonus too, tenants aren't really calling you or bothering you because the building that you just bought is pristine, at least if you've done a good job. And if you fixed it, then you don't have any issues from the tenants. But even if you use this program, there's one that investors completely neglect and have trouble scaling with because they don't use this program. And that is the DSCR loan program. That's a debt service coverage ratio. That's what it stands for. With the DSCR loan from 1 to 4 unit properties, you could put 20% down and it does not verify income or debts that you have personally. That's why investors are able to scale so many properties. You might be thinking like, how are like people just able to buy 5, 10, 15, 20? I just did a podcast with a guy that owns 97 units, right? One of the main loan programs is this. Because it doesn't look at your businesses, all your incomes, all your tax returns, none of that stuff. You buy a property, 20% down, bit more if you want, and then it only looks at the rental income from the property. If the rental income is covering the mortgage payment, then you're good to go. With this loan program, you can do 30-year, 40-year fixed terms. You could do ARM loans, interest only. You have a lot of options. Keep in mind that they do have prepayment penalties and you can buy them out, but that is the one caveat to this DSCR loan program. But that is the thing that people neglect all the time to use. But what if you need cash quickly and you need to buy a property that won't pass an appraisal or a typical lender inspection, right? That's where hard money loans come in. Hard money loans allow you to get funding quickly, close in 7 days. And if you're an experienced investor, meaning you've done a lot of flips, you could go as low as 10% down, right? Now, many lenders will require 20% down on the purchase price or 20% down on the loan to cost, right? Meaning purchase price plus construction rehab that you need, but everyone's different. And this will accelerate the funding to be able to buy the deals quickly because you don't need a lot of documentation, really. Credit report, bank statements, LLC docs, things like that. Keep in mind that hard money loans are usually like bridge loans. They're used for temporary purposes, right? So they're just used to get you the property and then you can refinance and hold it after into a DSCR loan, or you could sell it for profit. The problem is though, some investors need quick cash and they can't leverage their real estate and they can't touch it, right? So what do? Well, there's a program out there that does not use your real estate at all. It's an unsecured debt loan. I call it the Hail Mary loan program. This is a program where you have no other options, last resort. It'll get you the funding you need quickly to buy literally whatever you want. It's up to $500,000 cash to you. It's a 5 to 7 year loan, and it requires 2 years tax returns only and a minimum 680 credit score. So again, last minute, last resort option. If you really need financing to be able to get to that next property or to buy that weird commercial property, that's where these loan programs come into play. And there's no prepayment penalties. So you can always pay it off quickly. Most of my investors paid off within the year anyway. And as a bonus, I'm going to throw in a loan program that many investors don't even know exists. And that is a owner-occupied commercial loan. You can buy a 5+ unit multifamily property and live in the property. Usually they require 25 to 30% down. Rates are anywhere from 6 to 9%, depending on your credit, depending on what you're buying, things like that. But this is a really cool program. You can get friends or family together and share the down payment money and all pull your funds together to buy the property and live inside of it. That's a really good way to get your feet wet in investing in multifamily properties, because some of the best returns that people get are on their 5, 10, or 15 unit buildings. Like, for example, I did a podcast with someone who's 28 years old and he literally doesn't have to work anymore. He bought a building I think it's a 14 unit building, and he started saving for a long time. And he was in real estate at a young age, so he kind of knew about the game. But case in point, he bought his first big multifamily building. And because of that, he now doesn't have to work with the cash flow that he has every single month. So now that you understand the ins and outs of the loan program, I hope that gives you an overview of what loan options you have. Obviously, for the sake of time, I couldn't cover the exact loan to value requirements and credit score and all the nuances to every single program, because there's a lot of details. I just wanted to give you a quick snapshot of what investors today are using to buy and scale their real estate portfolio. So the right financing can have a massive impact on your real estate portfolio and your return. So if you have any questions on loan options at all, drop them in the comments below or reach out to my team and I directly. You'll have my direct phone number and my email address. As a licensed loan officer, I help a lot of investors build and scale their portfolio by getting them the right financing that they need. And if you want to learn more about how to buy multifamily property with just putting 5% down owner occupied, here's a video I made about it here. You can click on that. But my name is Stef. Hope you enjoyed. Thank you.